when confidence is ultimately lost, the only way they're going to get that confidence again is by putting a component of gold into the new currency.
Many investors hold gold and silver to protect themselves against various economic crises. But does this coverage hold up during stock market crashes? Knowing what effect a market crash and subsequent dollar collapse will have on silver and gold is essential for making investment decisions from time to time and deciding what to do in the event of a major recession or depression occur. It's a common assumption that gold and silver prices will fall along with the market, and if so, wouldn't it be better to wait to buy them until the dust has settled? But let's assume investors are right and our precious metals hold their value, or even increase in value. But during a depression, it's better to have gold or silver. In today's video, we'll share why gold and silver are the best options to survive in the debt bubble burst. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. When we look at how much gold and silver spot prices are manipulated and at the same time overseeing central banks and those in power, just like with the gold certificate, we accumulate because we're watching what the powers that are doing for themselves. And frankly, who knows more about money and how they destroy its value than central bankers? This is really creepy and fascinating that how much has been said lately about the loss of the US dollar's global reserve status. Where does this money go? It's getting into non-reserve asset coins that are accumulating a lot of gold. We find it fascinating because other countries that normally accumulate dollars for their reserves accumulating much less. Even if we look at Israel, who announced not long ago that they were buying much less dollars and buying more Chinese renminbi. In the current system, debt is used to create money. If we ask what would the new system be, because we still don't know what it is. The only thing we could find that money should be created from desire. We are talking about the theory of money here, but we also see them saying that the debt will create it. And if the new system is going to be debt-based, well, we've got hyperinflation, and we're getting rid of all that debt because it's already at nosebleed levels. It's just not that sustainable. This is a non-payable period, so we have to get rid of it and have to return it with dollars that has no value. Then we can start over in the new system. But history tells us when trust was finally lost, and we're really that close right now. The only way to get that trust back is to add a gold component to the new currency. During studies, most of the time, the reassessment is 1,000 to 1. So if we have $1,000 in the bank and when we wake up in the morning, we have $1. It's a global problem. In a hyperinflationary event, people cannot afford food, can't afford medicine, and die, and it will happen much faster. And that's why we think 2022 is a key year because they already had to postpone it. They did a test with 80 billion and it was a big flop. It got really quiet and 3 weeks later, they postponed the transition. The more often they do it, the more lack of credibility of the new contracts because they couldn't convince anyone to adopt a new system. 2021 has been a tough year and a disappointing year for profit-seeking precious metals investors. Silver and gold have had a relatively difficult year. COMEX Gold started 2021 at $1,906. As of now, it's trading at $1,790. That's a drop of $116 or about 6%. COMEX Silver is even worse. After starting the year at $26.50, it's currently trading near $22.50 with a loss of around 15%. On the other hand, for the few of us looking to hoard silver and gold as the ultimate insurance against runaway inflation, this has been an unexpected bonus. There are good reasons to be optimistic. Silver and gold prices appear poised to reflect broader inflationary pressures, but the bullish outlook is not without risks. That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.